12 o'clock. Um, and I don't know, do we have anything to talk about today? We're here for another edition of Chart the Markets. And man, do we ever pick some good days to do these things, don't we? Um, Not long before we came on the air today, things just kind of gave way. And when price falls, it doesn't fall, it feels like it falls suddenly, doesn't it? Today's sell off feels like, wow, that just came out of nowhere. Did it though? Did it really come out of nowhere? Did you not see this coming? You didn't block out the noise? And, one of the reasons people fail in doing this is because they fail to accept any structure, right? And we can go on all day long about what that structure is, but isn't it basically having a plan and a proven methodology that can be attributed over time to profitability and mitigation of risk? Like, isn't that what you need? It is exactly what you need. And if you do not have that, and you are not using that, you are subject to crazy days, being exposed at the worst times. And as you know, this is a language. Math is a language. Our technicals are based off of mathematics, thus a language unto itself. And just like math can describe gravity, technical analysis describes price. And ultimately, this will be as difficult or as fun and exciting as you want to make it. And most of the frustrations that we have is because we spend so much time fighting with ourselves. And that's why we need a system. Something that actually makes sense in the real world. Right? And our technicals didn't come out of nowhere. Right? They didn't just get created by someone. Right? They were created over time, and we've talked about this before, that the basis of the strategy that we use has three pillars: fibs, fractals, and filters. And it's important to understand just a little bit where that comes from. Right? These are real people that did real math that we're still using today to work through financial markets. The math that these people put together, and there's others, are how we built ETFs and mutual funds and the markets themselves. And over time, especially if you're comfortable with social media and you're getting a lot of your information there, you will be overwhelmed with people telling you how to do this, right? And is all we're doing is we're not selling concepts or order flow. We're talking about the mathematical roots of how markets move. That's what we're talking about. We use fibs, Fibonacci retracements and extensions, right? We use fractal applications, various time frames, looking for support and resistance levels over those various time frames, and filters, right? Fibonacci, Mandelbrot, and Bachelard. Three people that are no longer with us and haven't been for some time, but yet what they created, in some cases centuries ago, we're still using today. Because it works. Because it's not just repackaged fractal applications. like some concepts are. This kind of stuff's been going on for hundreds of years, what we use on our charts, starting with Japanese rice traders. And on days like today, when the sky falls on your head and you're surrounded by nothing but information and technology that is supposed to not only prevent that from happening, but also make you rich, here you are. There's no, if you ever work in advertising, you'll hear there's no new idea. A lot of this nonsense that you're subjecting yourselves to, and I hate to say it, is just Kleenex. It's just tissue rebranded. It's the same technical applications and strategies and tactics that we've been using for years. But for some reason, people want to go down a rabbit hole to confuse themselves because they think they're learning something new and going to give them an edge. No, you know what the edge is? The edge is accepting the fact that this is a language and that you have the ability to learn it, so that you can filter out all the stuff that you will just simply confuse you. Right? What do we use Fibs for? Well, because they provide us with that structure in the market. It's basically a psychological application at the end of the day. Fractals? Everywhere. They're in finance. They're in nature. But they're the areas on the chart that we use multiple time frames in various support and resistance levels on various time frames to help us understand where breakouts might be, breakdowns might appear. And again, these things are fractal. So what appears on that 1 minute chart can appear on a weekly or a monthly. And they repeat over and over and over again, just like the Fibonacci sequence does in nature. So through all of this chaos, we just use these three simple pillars. We apply a fractal application to what we do. We use Fibs to help us understand where the structure and might be, where those retracements and extensions that we might be able to find, and what it means when we break them. And then through all that, we have to filter out all the noise. Now, if you remember last session, when we looked at our Bitcoin chart, what did we talk about? We talked about not getting too excited about green candles, in what appears to be a downtrend. This is why. And I think we talked a lot about, not longing into resistance and how dangerous that can be. To accept it as a trade, perhaps, and that might be it. And if you're not looking for the risk on the chart, you're going to be subject to only being able to look at opportunity and being blind to everything but that. And that ultimately could end to your demise. And I will admit that I was one of those people at one time. Especially when you first start out, right? You're excited. It's all about the upside. Well, the danger was not looking at or not even being able to understand where the downside risk was. And as soon as I was able to figure out that it was in my best interest, I made, you become a better trader. So, all we have to do is block out the noise. Pay attention to what's on the chart. If we weren't looking at downside risk and we didn't have a system that provided structure and some reliable outcomes of where price might go, that's been proven time and time and time again, we'd be in big trouble. But we've talked about this over and over again. And, this is why we do these things live and why we keep all these things on YouTube for you to go back and look at over time. We have spent a great deal of time looking at this chart, talking about the 500-day moving average's resistance and what happens when you test, fail, or when you break one level, you'll find the next. Found the 20, found the 50, and the list goes on. Where do you think we're really going? We've talked about this. Is this not the next level down? That's the target, and the only thing that's going to change that will be an influx of money with velocity and momentum in order to change the trend. But, we have a problem, and we have talked about this in great detail. This is the 100-day moving average. You broke one level on the weekly, and I really like using the weekly charts to smooth out the noise. So here you have a weekly chart of Bitcoin. We talked about the breakdown at the top. Break one level, find the next. Break one level, find the next. And how we've been just holding on to the 100-day moving average on the weekly chart. This little shelf here kind of represents what it's been hanging on to. But having the ability to read price is one thing. Having the ability to understand trend is another thing. And what have we talked about over the last several streams? And the reason that we are repetitive is that because sometimes it has to be beaten into us in order to understand. We talked about the divergence between what is our filters in the T line, and in this case the 5 EMA that we're kind of using as a trigger. But these are our filters. And when this divergence is open down and to the right, as you are approaching or sitting on a major moving average, and that divergence stays apart while that sell signal is active, it's very difficult for price to hold. Now, look, did it try? Yes. But the divergence in the momentum was too much. This little impulse here did nothing to break trend. And the whole time, we can see where the opportunity is. That's the 200-day moving average. It's not unheard of for price to find the 200 on the weekly. That's a VWAP. Could be attracted to that, but ultimately, current price is attracted to past price. If, and let's talk hypothetical here, right? If we break this level in here, it's kind of structural, right? You don't want to break this because then it puts everything else below it in play. And that you've got this big gap in volume, which is a problem. And we've demonstrated why that is when price is falling quite regularly. So where do you think this is going to go? Are you more inclined to think that it is looking for past price? Probably. And that would be completely fair, because I believe that's what it's looking for. And I think on one of our other charts, yeah, we actually boxed that in. Again, that break, there's the 200. This is what it wants. It wants to, when there's nothing to hold it up, right? And at one time, I wasn't using a volume profile as regularly as I am now. But when you fail these averages, when there's all this gap beneath, it can be just nasty. And I think that's what is unfolding here, the nastiness. And I'm not trying to be negative or anything like that. This is complete objectivity. We have to be honest with ourselves what's on the chart. And what's on the chart doesn't look positive. Here's our daily chart. You don't think it wants the lower value range? Probably. There's that area on the weekly. That was that little break, right? You don't want to break that level. That's what that would be on the weekly. Again, fractal application. Probably wants the 1,000-day moving average. And if it doesn't hold it, then when all else fails, when there's nothing else to sit on in regards to an average, then you're going to look for these benches of past price where buyers and sellers have shaken hands in the past. And that's where price will go. It will go where it's been before, no matter how unlikely it feels. Right? That's just how it goes. I wish I could make it different. But that's what happens. And if you don't have any sort of structure to your trading, and you're just trading off of excitement of candles, you're going to be chasing your tail all over the place. Price has more than one direction to go other than up. Sideways counts, and so does down. And if you trained yourself to look at the upside of the chart only, it's going to be a problem. And it doesn't matter what you're trading. If you learn the language of the market, if you understand the fractals and the fibs and the filters, you can trade anything with price. Doesn't matter what it is. Doesn't matter at all. So what's happened in the last couple weeks? We've had markets fall, and things that have already fallen, like oil, and in some cases rates, start to rise. Pay attention. Because if you're just focusing on the 1 minute chart all the time, you're going to get run over by those things you didn't see coming and don't understand. Like, we're in the midst of a massive shift. What that shift is up for debate. But one thing is for sure, there's a shift going on. What's happened to the dollar? We'll use the XY as the example. Do you remember what we said this level was in our last stream that we would pay attention to? That's the O'Shite level. Well, there we are. That's technically, that's a structural problem. This is a weekly chart. You're breaking all of this kind of middle balance. And how did we break one level and find the next? And did we break that level and find the next? Was there all sorts of divergence down and to the right with our filter? Yeah. So we kind of knew how this was going. Here's the market noise, right? The random walk that Bachelor would talk about. Right? A lot of people think he was full of crap. Hundreds of years later, right? But in the theory of speculation that he wrote in the early 1900s, he talked about the theory of Brownian motion, I think even before Einstein did. And what he was able to do, ultimately, as frustrated as he was with the random walk, was he was frustrated enough to plow through and filter it out. I've showed you the momentum bands that I use. They are a direct byproduct of his math. Something that we're doing similarly here with our T-line. That's just market noise on a weekly time frame. That's all it is. Because that's all you'd be looking at. You'd be looking at these 3 green candles, getting support at an appropriate level, right? That's the 500 MA weekly. You wick it, you bounce. But notice anything? ultimately you can't break through the T line. And that's the market's way of telling us, based on the pillars that we use to apply to our analysis, that this is just not happening. There isn't enough momentum here to change trend. And all of this is still open and diverging down and to the right. So the filters were telling us that this is just noise, and that there was still more downside to come. And it did. That's the first touch. We talked about this of the 50-day moving average. I don't care what you're trading. Those are the things you have to pay attention to. This is basically you're fighting yourself. Every day that you sit down at your desk, you're fighting yourself. Especially if you don't have any structure or any system or any discipline. And I know that sounds crappy, right? It sounds like work, doesn't it? Well, you have to treat this as a professional. Whether it's your profession or not. Treat it as such. It's in your best interest to do so. Not just to protect yourself, but to put you on the right side of things at the right time. By simply doing what we're told. That's it. What I show you here is basically a byproduct of me being a self-admitted dumbass sometimes. I'm my own worst enemy. I admit it. We can all say that about ourselves at some point in time. But here's a chart of oil. One we've shown for weeks, months, really. Always accepting when we were in a downtrend. Well, the weekly chart for oil is no longer in a downtrend, is it? And for as much as we were able to enjoy the ride to the downside, we also said that we'd be the first ones to be on the other side of the trade. Not because it crushes our ego that it's not falling anymore, it's just because the job is to monetize the chart. And we're using our technicals and these pillars that we talk about to help us understand where price may go, and taking all the emotion out, or as much of it as humanly possible. So this is the first time on oil's chart, and we had a target, or I did, of this area down here. And we ended up with a little bit of what appears to be kind of a double bottom shaping up, which is great. We broke through the 61.66 level that we had as a target originally, and we're finally, it looks like this will hold, have a close above this level that was set back, well, actually back here. First time, assuming that price still stays positive. So, why is oil moving higher? I don't know. Why are interest rates moving higher? Why are equities soft? Well, they're all related. This is the shift, right? Now, is it more economic than technical? Not really. It's kind of both, because you're able to see when these changes take place, right? That was the monthly chart. Here's the weekly. Now, if I wanted the monthly to be my primary chart, I'd probably want to sneak an entry onto that chart off a weekly, just as an example. And here's my safe entry on the weekly, and price is moving up. You're just doing what you're told. And the conditions are such that this might be different. This might break out a little bit. And we've always said when the time comes, we'll be the first ones there. It's not a crime. Right? It's not a crime at all. It's just allowing the market to tell you when it's okay to get in the trade because it's likely the right side of the trade. And if you're mitigating your risks effectively, putting in stops, not using too much leverage, whatever you're trading, more often than not, you're going to be okay. And you're going to be able to get either, hey, reasonable trades. I'm just using these to the upside because they failed, but they were reasonable trades. That's okay. But eventually, when you get down to what's looking like kind of a structural level and you're getting support and some movement to the upside, and you dip your toe in the water, and it turns out to be a little more than a trade, that's okay too. They don't happen all the time. But the market will tell you when it's safe to get in and if you're on the right side. And let's be honest, you were on the right side up to here until you weren't anymore. And then you're on the wrong side. And when you're on the wrong side, our system makes it absolutely perfectly clear to tell. Don't play, I don't care if you're trading the 5-minute or the weekly. There is no advantage to being long in here as a trader, right? There just isn't. Just be honest with yourself about what you see on the chart, because this is the market's way of telling you that, in this case, price was moving down. So when things reverse, it's okay to change your mind and go the other way, because the job, again, is to monetize the chart. That's the thing. Right? And as long as you're doing that, you're okay. Excuse me. Let's go to Solana, because Solana's, I know everyone's been talking about when Solana breaks out. And here's the daily. And I don't think Solana wants to break out right now. Did we know that maybe there was something going on in the market? Yeah, we did. This is why I want you to pay attention to these weekly time frames, because they do tell us that trend-wise, because you're more likely to see trend moves on that weekly, that there was something going on. We don't know what. We don't know what comes after this big candle, but obviously there was something going on here. And did the market give you any reason to get back in? No. And what's this? Those are just 2 green weeks, aren't they? That's all they are. 2 green weeks. And what is a further downtrend? And could you tell that was going on? Yes, you could. Yes, you could. Because the market was telling you what was going on. And that trend was still down. And it still is. So here we are. Should we be debating with ourselves what we're doing right now? No, I don't think so. I think it's pretty clear what's going on. The market is still trending downward. What do you want to say? Is there a trade there somewhere? Yeah, I guess. But this has been a really rough ride to the downside. Here's the 4-hour. Why do I like the 4-hour chart? Because it's that entry onto the daily if you're maybe looking for that swing type trade. And it topped out right at the upper value range on the volume profile on the 4-hour. And that's all we're running here is just our basic script and the volume profile. So you were making higher lows and higher highs. I'm sure everybody felt things were just fine. But then all of a sudden you're not. And where does it happen? It happens at a level that you should anticipate to either get some resistance, or if you get a breakthrough, well, then that's a bigger deal. But when you start to fail at these levels of support and resistance, then that's a problem. And then you print a sell signal. And from there, you're in control, right? What we want to be able to do is to help you or not get run over by stuff. And in my experience, having good entries is really important. Maybe it was because I'm more prone to screw up, and if I didn't get a good entry, that's where it went. I don't know. But I just know that if we can help you get in control of the trade early, it takes the anxiety away, which makes you less likely to think about too many things at one time, and then we know how that ends up. Right? So, and there's lots of ways to address that. Trade fewer things, longer time frames, take all the anxiety out as best you can. But here you had a 4-hour sell signal. If you took that signal, remember, you want to be in on the daily. If you took that signal, you would have taken it up here on the 4-hour chart. You would have been in early. You would have been in prior to it printing on the daily chart. That's the good entry. Now, again, we don't know what comes after these candles, do we? Right? But you're in up here, now it really starts to print and everyone's piling in. Well, you're already in it. But occasionally, you get those snapbacks higher. Sometimes they knock you out. Sometimes they don't. Because you're protected because of that good entry. And you don't get stopped out. And then in a blink of an eye, the beatdown continues again. Lower highs. Lower lows. Just like you had higher lows and higher highs, now you're into lower everything. Don't pretend you can't see this stuff, because so many people are conditioned to only going long, and they just can't acknowledge the things they see on the chart that are downside related. Right? You have to take the emotion out so that doesn't affect you. That was Tuesday, our earlier stream. What did not happen? You did not close above the T line, which may have been an indication. That's one of the first things you look for, that, hey, maybe the trend is changing. That never happened. As a matter of fact, you wicked it and closed below it. That, to me, whenever I see that, I interpret that as somewhat bearish until proven otherwise. And this is why, because it wasn't proven otherwise. And here, what do we have? We have all this divergence down and to the right, just simply approaching major moving averages and breaking them. Breaking. Already did it up here. And again, if we take the candles off, just to help illustrate what we're talking about. Oh, when you break the 20 and 50s, this is a big deal for me. And you've got that kind of divergence down and to the right within our filter telling you there's basically no hope it's going to stick. That's a big deal. And here again, break it to the upside here, which is great. You're breaking through the 50. You get excited about that. But then to the downside, it opens up and you can't hold. Opens up and you can't hold. And we talk about this in the Telegram, right? Where you can trade without candles. We really can. As long as you're not taking stupid risk over short time frames, it's doable. Because, again, having the ability to read trend is one thing. But price rather is one thing. But when you can combine that with reading trend, that's a powerful combination, right? And you're kind of seeing why. Now, we're not here to beat up on Microsoft. That's not what this is about. But this is a chart that we have shown you before. This is the daily. And we're just running our script, our volume profile, and that is a 20, 50, and a 200-day moving average. And let's just leave it at that for now. Do you remember when we pointed this out, that this is one of the funkiest looking tops that I've seen in a while? It didn't look right. Like, that's kind of how it printed. Like, it's kind of one of those murdery looking tops. And what do I mean when I say that? M's and W's, right? M's are murders, W's are winners. That's an M to me. And it just capitulated. There was something funny about that top. Anyways, we talked about that before. And you break one level, you find the next, you start, the divergence opens up down to the right, and you just start breaking things. And when you start breaking things like the 200-day, that's problematic. Where did you break it? Here. There's your first test, more or less. And it was just a hard no. Hard no. And how do you take the noise out of that chart? Let's move to the weekly. Like, if you're using so much juice that you don't have to look at the weekly, it's probably too much. The weekly was telling you everything you needed to know. There's that funky top. On the weekly, they're just wicks. Push down, push down. That's how the wick is formed. Sellers pushing it down. Break the 20, split it in half. Boom, boom, boom. Approaching the 50. What was the chance that you were going to hold the 50 with that sort of down into the right momentum? 0. There's the point of control. Current price is looking for past price. This point of control represents exactly that. This is where the volume is. Right? That's what it's measuring. Where buyers and sellers have shaken hands in the past. When all else fails and you can't find support, price is looking for a bench to sit on. And it could potentially find it. Would it make sense that when it found this much past price, that, maybe it'll chatter a little bit? Possibly. What does it tell you, though, if it breaks the point of control and heads straight for the 200? Bigger problems, right? You've already hit the 200 way back here twice, double bottomed off of it actually, and popped. Not quite in here, but close enough. But do you not think that this thing is in a hurry to find a comfort zone of where it's been before? It sure as hell is. And again, if this doesn't hold, it's going to look for the 200, and you see this gap. Just like you had one up here, and had one up here, and essentially there too. It's really hard for price to hold up when there's nothing there to hold it up. It's not complicated. There's just nothing there to hold it up. And it's just in a hurry to find somewhere to sit down. And because everything is fractal, let's just take a sneak at the monthly. So we're breaking the 20, right? I think this is really interesting. It's probably technically looking for the 50, or, let's just maybe something in here. I don't know if this wick is bothering me. Probably maybe in here. Probably maybe. That sounds really certain, doesn't it? But what am I trying to do? I'm just simply trying to find a level of past price where I can say, okay, here's some resistance. here's some support. Let's not pin the tail on the donkey. We're just doing this quick and dirty. But if we failed one level, we're looking for the next level. And they come in different forms. So we actually
Sorry, Bon, I don't know what happened.
we have a
Just
level on
removed me
here.
from the group, man.
It's okay. We have a level on here. That's 346.16. I don't know why we dropped it there. We've obviously picking this up from before. Or that's today's. No, it is today's. Look at this. This happens when you go parabolic, boys and girls. Fan out your major moving averages. And what does that do for us? Well, it creates a fun zone. Same thing to the downside, right? When you go down, they fan to the downside. Well, here, they fan to the upside. So now do we have some more targets? Sure. What if we don't hold the 50? Do we have other targets now? We certainly do. We have this level in here, and then we have another target. Break one level, we find the next level. So if we start looking at a whole bunch of charts that look the same, what does that mean? Probably means you have a bigger problem. So volume profile, that's the point of control. 20, 50, 100, 200. Break one level, find the next level. I think we talked about this last week. You know, if it doesn't hold the 100 here, it's going to fall into this gap. This is Tesla. And find and look for what probably? Well, the 200 as it plays around with the lower value range. And this gap is what you're concerned about. And here you have somewhat of a, you know, that's structural. You don't want to break that. Uh-oh. So we closed this week below the 20 and well below this green candle, last week's candle. We have a problem. You have a volume gap and you have the 50 MA. And of course, that upper value range. And these are just like magnets for price. So when price is falling, and you know, why is it a magnet? Well, do you see anything in there to be able to keep it from being drawn to the 50? Not really. And that's why price can fall that quick. Right? Or if we invert our chart, go up. But here we are, another chart that has kind of an interesting look. This is NVIDIA's weekly. Still hanging on. Should have started with the daily. Remind you of anything? Right? That's like Microsoft-itis. That little top, whatever that's called. I don't know, man. That's just not good. There's something about these kind of funky little tops. And, you know, there's another one. It's just being weird. It just looks strange. I don't like it. And I think it's the start of something else. You know, we're not breaking out here. And as everything else continues to get weak, and there's a lot of reasons for that to happen, this is when you want to be aware of what the downside is, either to monetize it or protect yourself. If this weekly chart breaks down, how much of this do you want to give away? Like, let's just pull out some fibs quickly for 1 second. If we just take this low, and this is a weekly, so, but we're going to stretch it out. %50 breaks the 50, and 618 breaks the 100, and doesn't even bring you yet to the upper value range. And I'm using the weekly chart because it takes a lot of the daily noise out. Now, is this still a bullish chart? Yes. right? You have to be honest about what you see. This is still a bullish chart. But on the heels of what you see around us, whether it be in, in crypto or some indexes, there's a lot of red. So it's appropriate to be able to wake up and say, yeah, maybe I should look at what the downside risk is. Or time to put some shorts on. Still a bullish chart, but there is some downside risk here. So when the fib levels fall below where you would expect some support, like 50%, you'd say, okay, yeah, I can deal with that kind of a retracement on this move. But when that 50% breaks the 50-day moving average, I'm not as comfortable with that anymore. Right? So it's okay to overlay your rationale. Typically, am I okay with 50%? Yeah, probably. Depending on what it is. But am I ever comfortable breaking the 50? Absolutely not. So that's kind of sus. And then you go to 618, well, it does the same. It's just note to self. And if you're trading only a handful of things, and this is one of the reasons why we suggest you do that, so that you are well prepared, well organized, and thought out for when things go if things go sideways, whether it's up, down, or sideways. You're well prepared for it because you're not overwhelmed trying to do analysis, because there's enough to do on a single ticker if you're doing it right. And we talk about this all the time. You want to be able to look at that chart at a glance and go, yeah, I know what's going on, and instinctively know what's going on other time frames. Wow, geez, if it's breaking the 50 here, then it must mean that it's doing something on this. You'll just know because you're so familiar. So here's BNB. In some respects, it has the same kind of price action that Bitcoin did with just different resistance. Is this the we've talked about this. This is the first touch of the 100? Absolutely. Since you broke it. They typically fail. So not only is longing into resistance dangerous, and there was someone in the Telegram that we were talking about this the other day. Longing into resistance is one thing that you always need to be careful for, and we talk about it a lot. Longing into resistance, that's a first touch, is even more suicidal. And the reason is because you're increasing the probabilities against you, right? The deck is stacked against you at that point, a lot, right? So are you not better off to get a confirmation here? Because this is probably what everybody was hoping for, whether they use averages or not, but they were hoping to break out, and it's quite evident that that's not happening. This is the first touch. Be very careful of those, and be very careful of longing into resistance ever. Right? Wait till you get above there and then run. Then get in. When the market tells you to get in. If this would have printed something like this, just hypothetically up here, would that be incentive to maybe get into that trade? Absolutely. And if you were on the 4-hour, you would be well ahead of the game. Not only ahead to the upside, but if things went sideways, you'd be ahead on to get out. So again, those 4-hour charts are great if you're looking to find things on the daily. Now let's look at our friend Aster. I feel today we could talk about charts all day long. And I want to go back to the 4-hour. Because, as I just said, I love these 4-hour charts. If you're going to get a breakout on the daily, it's going to come off the 4-hour. Last week we printed a sell signal right at a buy signal right at the 50-day moving average. And like I said, I'll wake up in the night for those. So you print a signal, you've got the divergence that's up and to the right, with our T line. And then all of a sudden, we find the 200-day moving average. Right? So this is the insurance that we paid early on for the market to figure out what it wants to do. Now, when we look at this in hindsight, we go, oh, I hate giving away that. Well, I can assure you that these candles, as before they printed what they did, would have driven you insane. And if you've done this long enough, you know exactly what I'm talking about. What ended up printing as a big green candle here didn't start like that. It probably looked ugly. And that's the market figuring itself out. But that's your confirmation. And even if I wasn't using my own system, I'd be buying at green candles off the 50. So buys off the 50 have a higher probability of success. You hit the 200, however, and what happens? You fail. So the 4 hours, the great entry onto the daily, but sometimes they're just trades, and that's what this was. A good one, mind you, but it turned out to be not the runner onto the daily that you would hope it was, but it was a good trade. When you see this doji at the top of a leg up at a first touch of especially the 200, pay attention. That is the clearest sign. Now, I know, again, we're looking at things in hindsight, right? But please, if we follow our own rules, first touch of a level, once it's been broken, has a high probability of a failure. So we know that if we were just using a line chart without candles, without the doji, what does that tell you? Tells you that you're failing. You don't, it doesn't have to be the candle. You don't have to see the doji. But when you do see these dojis at the top of these legs up, pay attention. If you've been able to monetize these runs up, this is your sign. This is the failed breakout on a 4 hour. I hate to say it, but it is. We show these on smaller time frames quite often, and they don't feel as painful. But when you see it on a 4 hour, that's what's going on here. So you had your trade, and then right away, it was in the other direction, real quick. And, just to give you an idea, as you were approaching these major moving averages, was the divergence open? Yes. Down and to the right? Absolutely. Here's the 20. Here's the 50. Shouldn't have to show it anymore, but there you go. We have a great system to help you manage a trade and not get worried about the market noise, the random walk. 3 red candles in an uptrend. A couple green candles in a downtrend. Now, when we're in here, sometimes after the stream, people come into Telegram and they say, my God, you make it sound so easy. Well, I appreciate that it's not easy. Right? That's why, I use what I use now. Because I've acknowledged over time that, to myself, that this was a little more difficult than I ever thought it was going to be. And I needed some framework around what I was doing. Remember last stream we talked about United Health. And again, it's not to beat up on a company or anything like that. Let's see. I don't want the line. So here we are on the weekly. what could price want, right? Like, it wants the next level down. It's attracted to the lower value range and possibly the VWAP and the 1000 MA. Why do we use fractal analysis? Because it helps us understand time frame by time frame, pattern by pattern, support and resistance by support and resistance over various time frames where the hell we are. I can't be the only person. You guys can't be the only people that know this. I'm not interested in the narrative, in what people say. It's interesting conversation, but at the end of the day, it's just noise. None of it can be, can you go back to your desk and say, I'm going to use that to make a trade. Maybe over a very long investment time frame, but it's just talk. I'm interested in what the market says, not what people say. Maybe I'm antisocial, who knows? But I don't care. I'm interested, but I really don't give a rat's ass. And I don't care who it is. Because all I care about is what I see on the chart. And at no time did this United Health chart on this time frame, which is a monthly, give you any reason to believe that this whatever was going on here was over. Because the market was telling us the entire time that it was not done yet. And when things get noisy and you can't make sense of the chaos, what do? You have to take out the noise. You need a filter. Sometimes that filter is just time. Why do we use the weekly? Because it takes out all the daily noise. It's the same. It's no different. My opinion on this, where this is going, has not changed. Even over the last couple months when we printed these green candles. Even last month. Because at one time we talked before about, what these candles look like in hindsight. Well, here's an example in the other way. At one time, this was in all likelihood a giant green candle. Right? The third green candle. Looking like it wants to break through the 100-day on the monthly. That's what it would have looked like, but that's not what it did. The market was telling us that's not what was happening. This thing wasn't even going to crack the 5 up through the T line. It doesn't have enough momentum. And here you are approaching, you came all the way back to the point of control on the monthly chart and almost tagged the 200 on the monthly as well. And in all likelihood, this is a failed breakout and you're coming back to exactly that level. And I think my $200 target will eventually get hit. But not because we know anything that somebody else doesn't know. In fact, I probably have less information about that business than anybody. But the chart was telling us what we needed to know. Again, this is about what money's doing, not what people are saying. And we measure money over time. We're measuring it fractally, over the monthly, over the weekly, over the daily, over the 4-hour, whatever the hell time frame set you're using. Because this is the kind of stuff that helps you from getting hit by something you did not see coming. If I just use the TradingView chart for this, I think it's going to be a little more clear. Because we've been in here before I had these levels. No time did it tell us to buy. These are just the market noise over this time frame that didn't add up to anything. And in all likelihood, what did this chart give us an opportunity to do if you understood what our system was doing? You would identify this, excuse me, as a failed breakout. You could see the momentum that was still intact. And by chance, if any of these candles knocked you out of your trade, what do we have an opportunity to do with confidence? Re-enter the short. Because you understand that, hey, that's a failure. There's reasonable risk here. First touch rejection on a monthly. You come back down, take out the previous wave's lows, and back to the point of control. Price is talking to us. Our indicators are talking to us, and they're communicating through whatever math set they're using. You're trading on psychology, most of us. News, emotion, stuff you think is cool, things you're interested in, things you want to buy because they represent the things you hate. I don't know. But it's not a strategy. That's tactical emotion at play. And that's not what we do. It's not what we try and teach anyways. What we're trying to show, how to find opportunity, excuse me, how to find opportunity, how to mitigate risk. That's all we're trying to do. And it shows up on our charts. Daily YM, which represents the Dow, breaking the 20. There's your sell signal from a few days ago. Is that Thursday? Yeah, it is. That divergence opening up down and to the right as you approach the 20. It can't hold. That's a representation of momentum. Right? So if you're faced with that phenomenon as you get to the 50, well, there we go again. Right? It'll just be another break. I think we need to look at a few things here. XRP is one of them. And you'd think, you know, after all this time, there we go. Any different? No. Unfortunately. After a while, when you see what price does and where it goes unexpectedly in an impulse, you have to start to acknowledge that the chart starts to look like a math equation, doesn't it? And in full disclosure, anyone who knows me will tell you that I was probably the worst math student that ever walked the face of the earth. But somehow I ended up in this and loving it. Because I appreciate what the math can generate, although I suck at calculating it. And now with with technology, it makes it a little easier. But the chart is one giant math equation, broken down into pieces. Time, price, momentum, volume. The list goes on. And it's what you see on the chart, that ebb and flow. You know, we show it so often. After a while, you can't deny it anymore. This chart looked very similar to the Bitcoin chart, where it was having an issue with the 500-day. And it behaved the same way. And again, careful longing into resistance, right? This is a great trade, by the way, if you were in it, right? All that impulse stuff. As soon as you see that 5 EMA go red, it's like, uh-oh, right? Maybe it's time to go, because these impulses, this is the horse being away from the barn, right? The barn is the T-line, the 5 EMA, that's kind of our filter and channel. And when the horse gets too far away, it likes to come back. And that's exactly what it did in a hurry, right? So it's just a matter of, again, breaking one level, no matter how ridiculous and impulsive this move may have been, but you broke one level to the upside and found the next. Everybody wants to talk about that, but as it does it to the downside, it's like, no, I don't want to hear it anymore. Please don't show me that. This is opportunity. Don't get your knickers in a twist, right? Like, if you can't monetize the chart to the downside based on what you're going to encounter in the next 6, 12, 18, 24 months, you better get used to it. You better take a crash course in how to sell short, because there's going to be a lot of that happening. follow the chart, but you're going to see it in opportunity. And like we've started to show you today, break one level, find the next to the upside, break one level, find the next to the downside. This was just one big failed breakout, wasn't it? So, we all know what these levels are. We've had them here for ages. And here we are right in the heart of them. And last week, we talked about what this looked like and how it had the potential to bring us back to the 100 MA, and here we are on this weekly chart. And at any time, again, this is a very similar pattern that we've shown on multiple time frames on multiple assets. Right now, because the market is doing what it's doing, it's mostly down. But it demonstrates that what we're showing you, this could be chickpea prices, snail shells, I don't know, anything with price. And you'd be able to read it. Doesn't matter what it is. When you see this, however, to the downside, pay attention. This was just 1 week of positive price action that couldn't close above the 5 EMA, which for me is not bullish. If you can't break one of the filter levels, then obviously that's not a good thing. And when you have this divergence between the T line, which is all part of our channeling, as you approach these major moving averages, are you going to hold? No. And I know I'm spending a lot of time on this today, but that's because there's a lot of opportunity. Because what our system is doing is helping you manage your trade. This is another example that if this impulse up knocked you out, let's just run. I hate to do it on the weekly again, but we're gonna. I'm not gonna count that. Let's say this move knocked you out. Maybe stopped you out. You had a trailer, whatever the case may be. But this impulse up just stopped you out, and you were going to take your toys and go home and not trade XRP again. Just so you know, right? Like the upside here is way up here. That's 618 and that's 50%. But as you're breaking down, and this breakdown continues, I obviously don't think this is going to be the low. So does that mean maybe there's limited upside? Yeah, I think so right now. Because what's our biggest risk on this chart? The biggest risk on this chart, at least for me, when I look at it instantly, is this. Now the volume profile is not showing because there's just not enough data yet on this feed. But we know instinctively that the volume gaps are created not by what's currently being traded but primarily what was traded in the past. So we know through this impulse up that in here is a big gap. So if you fail 100 MA on this weekly chart on XRP, break that lower range that we identified, that's big trouble. And just for interest's sake, let's just put a little circle here, because that wick, that's weekly, so it's going to look huge. That wick, if you break this level, and right now, do we have this kind of open and to the right diverge down thing going on? Yeah, we do. So let's assume, just for interest's sake, that we break it. That wick. I hate those. It's like the hanging Chad, right? Like it just hangs there and it just waits to be hit. So and we know that it's in the gap, right? We know this is a big volume gap. This damn thing would be right in the center of it. And again, look how the noise is taken out of the weekly chart. This calms your brain, by the way. The shorter time frames, when they're noisy, will make you insane. So there is still downside risk here. And, I hate to be looking at chart after chart after chart that, looks like it's been kicked in the teeth. But I mean, they look like they've been kicked in the teeth. There's some crypto charts though, if you got, if we like to have fun every once in a while. Like, look at this daily of this thing. Those two equal tops. So why do you look at multiple time frames? I don't even know what this is. I have no idea. No clue. I'm just using it as an example. When we talk about those skis, right? The two big, the big red, the big green candle, those equal tops, and then when it starts heading in the opposite direction. Like in the crypto space, you see that all the time on various time frames. And this is just like get out. Like, if you were long, don't be long anymore. But if you're not watching the daily, like most of you know, I know you don't, because you're so fixated on some of the shorter time frames. But if you were looking at the daily and you saw these two wicks and these equal tops and then price start to pull back, that is the cue that you're probably in the midst of a bigger move down. It's so much fun to watch. And on the shorter time frames, by the way, do they look kind of wild? Yeah, they do. And how do I find stuff like this? It doesn't matter if it's a stock or a crypto or a commodity. It's simply because I scan for charts. Right? That's all I do. TrendSpider's awesome for it. TradingView is obviously very good too. But did we not know? This is really the chart that I wanted to show you. So after the big move, let's do our fib thing again, just for fun. Just for quick. All right. Here's the 50% level. So we actually, you pulled up, identified that as your top, broke all the way to 618 and hit the 100-day. And this is what you'd be looking at. Let's be honest with ourselves, right? Because it's great to look at things in hindsight, but to be able to see it in real time is often a little more challenging to understand. What I want to point out is that the divergence up and to the right in our system is still held. Even here, we never produced a sell signal. These were just 3 red candles in what turned out to be a continuation move that took out this high. So not only did the trend hold, but you also got a bounce off the 20. If you identified on that 1 hour, even from here, that it looked like that was your top, you can start to plan what your next move is. I'm just assuming that, let's just say this is the time frame we wanted to trade, so we would be looking at a shorter time frame. But let's just say there's the break of the 20. There's your signal. You're breaking one level and you're finding the next level, and look at the momentum down. The whole time you're looking at the at the fib levels and you're like, oh no, okay, I broke 50. At where? The 50, right? Broke the 50-day moving average. Now I'm 618 and I'm still diverging down. This is the managing of the trade part, right? This is the managing of the trade. And this is why it works. Impulse up, wick the 50 and pull back. Gotta love it. And then, wick it again. Fail. Whoop. And guess what? There's the 1,000-day MA on the hourly chart. You broke it. What's that mean? Is that a good thing or a bad thing? It's a bad thing. Breaking one level, finding the next. That's all that's happening. And to take the noise out, to figure out what's going on, hey, let's go to the 4 hour. Is the 4 hour done? No. Did the 4 hour give us any opportunity to move higher? Not really. It broke everything it hit. So here we are. Could you get a little snapback maybe to test this? Sure. Doesn't mean it's moving higher. This just looks like one big retracement to the downside. So what do we do with all that? We just monetize the chart. That's all we can do. That's it. You know, you can stare at Bitcoin all day long, but that's not going to help you. Let's look at gold. Daily chart. Now, this is really important because we've showed this before. What happened today? This candle wicked the T line and then ran higher. Is our channel still diverged up and to the right? Yeah. Still a bullish chart? Uh-huh. This is why if you don't have structure around your trading, you are just the elastic band that gets whipped around and stretched and then you snap. Like, I know I woke up early this morning and gold was down considerably. You know, probably approaching, you know, that lower level there on the daily. And is all you heard on news shows or on social media was, it's time to sell your gold and buy your Bitcoin again. Doesn't look like doesn't look like that's the trade today. Now, what do you want to do? Do you want to listen to that stuff all the time? Because a lot of people do, right? That's their fuel. The fuel needs to be what's in front of you on the chart. The fuel needs to be what money's doing, not what people are saying. And understanding that this is a language. It is the language of the market, a real-time representation of what money is doing, not what people are saying, and yes, it matters. Yes, it matters. Don't get sucked into the tornado of what other people are saying and doing with their money. That's up to them. Now, here's our Apple chart. And it's a chart we've looked at for quite some time. So yeah, higher lows, higher highs, then not so much, right? Note this is so simple. Just note the divergence, right? As you approach these levels, and if it's intact, there's a high probability that it may fail, like you see here. And understand, you know, the concept of first touches that test have a higher probability of failing or bouncing, depending on the direction. But I mean, is this the first touch of the 20 up in here, and it's can't quite figure it out yet? Produced a buy signal, but we haven't broken through the 20. Notice this, literally the wick on the daily, wick the 100 MA, which is the first touch since it broke, right? Here it was getting a little bit of support, but we knew it wasn't going to hold. You can have your green candles. When you see this, especially at a support and resistance level, this is open down and to the right. And the more it's diverged, the more momentum there is. And this momentum is representing, boom, this big impulse move. So as you're playing around here with these 5 green candles, that people might think, hey, you know what, we're going to bounce here and then move higher. The whole time you were being told that's a sucker's bet. Now this is kind of a retest of the 20. And so far, is it still bullish, quote unquote? Yes. But, you're not going anywhere unless you can break through the 20. Let's see on the volume profile if there's anything here. Okay. So we're at a little bit of a shelf, which is causing a little bit of this from this in here. And it takes some time to chew up that price. Now, still a bullish chart. If you can break through the 20 and start getting, this is the kind of don't long into resistance thing we're talking about. But if you get above here, can you see the upside on the daily? Sure. Right? You've already tagged the 100, so there's a higher probability that you could push through it on the second attempt. And then you've got the 50 up here, which is kind of set inside what is a shelf, but this gap is really what you're attracted to because price can move quickly through those. That's the upside. And then, of course, if it breaks through that, which would be a first touch, so you'd have to go through the process, but then you start looking for previous waves highs. That's just how the game goes. But if it fails, what are you looking for? Well, you break the upper value range. This just turns out to be a failed breakout. You take out the previous wave's low, which puts you in the volume gap to the downside this time. And here's the 200 MA waiting to say hello on the daily. And if it looks noisy, then go to the weekly. And this week, so far, has done what? Again, this is the fractal application. Different support and resistance levels on different time frames. We wicked the T-line and pulled back. That's not good. Still diverged down and to the right. Well, we know that's downward price pressure. When you see the wick hit and then pull back, well, that's another tell. And that's not to the bullish side, right? You have to break through there in order to change trend. And if, let's just say hypothetically, Apple's weekly closes here, does this not start to look like the that failed breakout again? Right, where you do this, and then you take out that low, and then probably looking for the next level. Does that make sense? If we close below here, it's not bullish. Now, understanding we don't know what comes after this candle, it could start pushing and maybe test higher levels. That's possible, and maybe the failed breakout starts up here because it would be the first touch of the 20. But this kind of could be what we're looking at. Take out the low, and then it continues and then falls and looks for past price, which is in line with the 50 MA. I'll just leave this here. And that's what we look for. That's all. Like, again, we're not doing we're not doing anything. There we go. We're not doing anything that anybody else isn't doing. But we're doing it with a systematic approach, and we're trying to do it with professionalism, with the emphasis on keeping you safe. And if we can keep you safe and alive, you'll have greater opportunity to make money. If you venture into the water and get eaten up real quick, well, then no one can save you, right? Again, we don't want you to get hit by something you didn't see coming. And there's lots of games that people play in this market. Right now, I spent some time on YouTube last night, and I couldn't believe how many people were trying to tell me how to trade because this market was chaotic. Really? That's interesting. Oh, hello. Remember this chart? This is a great example. People trying to tell us down here what we should be doing. Isn't that interesting? How many people are telling you what to do up here? Or down here? Count them, quick. Not a lot? Oh, unless it costs you $7,000. This is not hard. It's just repetitious, And you have to be disciplined. And if you hate repetition and you hate discipline, it's going to really suck. Because that's really one of the important combinations, in my opinion, to be successful. Right? And this is a chart that I don't want to bore you with because I know we've looked at it before, but it's very, very, very relevant for us to go back over time and check our work when everyone else at the beginning thought we were batshit crazy, no matter what side of the belief fence they sat on. All I know is that our script told us up here that this was a safe short entry. Or if you wanted to interpret it as maybe time to take money off, that's up to you. But I'm saying what it's telling us here is to go short. That's a safe entry short on the weekly. You have no idea what comes after the candle that you're on, right? But what do we know when we look at this chart? We know that we're trading above all of our support. And we have this here. And this gap. This is a gap, right? We know that this is going to create a big gap. So what happens if you break one level? You find the next level. And what's happening as you're breaking one level and finding the next? Well, current price is looking for past price. Well, here we are breaking these levels. And we talked about this way up here. Where did we think this was going? Right back here. And we left it here. And then we drew this on the daily because it's the 1000 MA. We extended it just like this, just to prove a point. And you remember we've been telling you that you're coming back to the 1000 MA. No, you weren't. That's bullshit. Oh, well, okay. Oh, no, you're not. You're nuts. You don't know what you're talking about. You still don't know what you're talking about. You still don't know what you're talking about. I don't know. I think we know what we're talking about. And not because we're smart, but because we have the ability to be disciplined and do what we're told. I created this because I couldn't do that on my own. I needed something to hit me over the head to help me not overthink things or underthink things because I'm stressed out and anxious and I'm reacting to what's on the chart. We are not being proactive here in the sense that we're not making predictions. Right? Although I have a good friend who teaches data analytics who tells me that's maybe not that way. But we don't want to be telling people in this field that that's, we're making predictions. That's not what we're doing. Right? What we're doing is we're analyzing and monitoring and tracking price on a chart through a handful of simple rules that people hundreds of years ago, for the most part, created. Or gave us the tools to create. And that's all we've done. And applied some rational thought without having to be in some sort of science soup or some sort of regurgitated Kleenex thing. We're not doing anything here that hasn't been done previously by other people. And I want people to understand that. I didn't make up all of this stuff out of fairy dust. Right? I had good teachers. Right? I learned from a gentleman by the name of David Steele Smith Elliott, who's probably the bulk of, at least 60% anyways, of what I apply, and Stephen Bigelow. And unfortunately, both of them have passed on, but I have tremendous respect for those guys. And you know what? When I first got into this, I was expecting to meet people like that who were going to talk over me. But you know what? They were the most grounded, simplistic people that I ever met. And that they would tell us to keep this simple. There's no need to make it any more complicated than it already is. We just have to accept that we're following what the market is telling us. That's all we're doing. And our indicators that we use here just simply provide context to help you stay on the right side of the trade and to manage it once you're in it and to give you targets. When you enter the trade, you should know where you're exiting the trade. And that should be set. You should have stops in place. Mitigate, and you know what? Getting stopped out is better than getting completely liquidated, right? So, don't take it as a negative thing. It's a badge of honor. But it's all I know is that we got a sell signal here. If I've just taken off all of our averages, and at no time did price give us any indication, the market give us any indication that it wanted to move higher. And the whole time, well, this is the double top of all double tops. There's the center channel broken, and here's your past price. Like, we nailed this. Not because we're any better than anybody else, but because we were able to just follow what the market was telling us. We're not front running anything. You don't get a cookie for that. Usually you get kicked in the teeth. Right? There's no bonus points for the average trader to be front running because you can't afford to. You can afford to be profitable. You can afford to mitigate your risk and not make stupid mistakes. You can take obvious signals. Move up, consolidation, buy signal, divergence opens up, boom, price goes parabolic. That's the job. Two equal tops. What's going on here? Well, maybe the people that didn't take it off up here are getting a second chance. I think they took it. Everything that we talked about happening on this chart weeks and weeks and weeks ago when this first originated, there it is. And the context just simply comes from adding, hey, sell signal. Oh, we broke a major moving average. And that, by the way, is your upper value range. Well, that's kind of bearish. All that divergence is open. Down and to the right. There's an impulse candle that, if it did check you out, did it not give you an opportunity to re-enter that short at a really good spot? Yeah, it did. With confidence, because that divergence was open and down and to the right. And just for the sake of, context, there's the 50. So these little candles here that just sat, well, what were they sitting on? The 50. But you broke it. With velocity, right? Now you're down and to the right. A little more context. Just broke another level. Do you feel comfortable staying in the trade? Yes. Open down and to the right, approaching the major moving average. Not going to hold, not going to hold, not going to hold, not going to hold. There's your 200. Not going to hold. What is going to prevent price from getting down to these levels? A ton of money. A ton of money it would take. And I'm not sure if it's out there. But my opinion, I'm not basing it on that. I'm basing it on what the market's telling me. I understand that it would take a lot of money to reverse this trend. But I got to tell you, breaking the 200 is not healthy. So, I think there's still more downside, but taking off all these averages, even at that, our system was telling us to stay in the trade to the downside. That these were just 3 green candles, right? This is the random walk that continued in a trend. But, thanks to to Bachelor and Mandelbrot for Fractals and Fibonacci. Thanks to them for giving us the core of how to manage price. Fibs, fractals, and filters. You don't have to invest in 1,000 platforms. I'm exaggerating. But, some of these trading platforms are expensive. And you know what? It's not just one cost, is it? Oh, by the way, then there's the data, and then there's the this, and then there's the that. Oh, and then you got to learn this, and you should probably buy that. And before you know it, you're thousands of dollars in or several hundred of dollars in, and you can't afford to lose any money at that point. But that's what happens. Because you're just focused on the wrong things. Not intentionally, sometimes that just happens. But hopefully what we're doing here can help take out the noise of what you're encountering every single day. It is a job to block out the noise. I get it. It really is. But in the end, it's going to be your savior. If you can block out the noise and simply focus what's on the chart, you're going to be much better off. This is the US dollar JPY. I think we looked at this earlier in the week. And what's happening here? So here's Tuesday's candle, which was earlier when we did our previous stream. So for context, there's the signal. All that stuff opens up, and if we add the averages on, you can see that we're not holding anything. Did we really get any effort here? No. So this is big impulse down. This green candle didn't really even test the 5 EMA, and today's candle can't seem to edge above where yesterday's candle closed. Plus, it hasn't been able to have enough to even tag the 100 or tag the 5 EMA, and that's all bearish. Right? So this is just the impulse down, and then when we don't have the ability to push up, what happens? We kind of go sideways, and then whoosh, do one of these, right? This kind of impulse down, and then you do this, and then you do that. We've seen that before. You can't break out, and then it turns out to be this is the failed breakout in here, and then you roll over. And where do you roll over to? See the gap? This could be IBM. Doesn't matter. But where is price? Where do we think it's going? Well, had these levels on here before. This is the you-know-what level that the dollar broke. So here's current price. What do we think it's looking for? It's looking for these levels down here. And in all likelihood, the 200 on the weekly and the point of control. It's looking for where it's been before. That's it. And once it gets there, it'll figure out what it's going to do. Now you can stay up at night and try and figure out why it might do maybe what we think it might possibly do. Or you can just let the chart tell you. I prefer this approach. But that's just me. All right. Let's look at LLY. So in all of this chaos, so you can see we've talked about Lily's chart last week, kind of being sussed there at the 50, in that it's broken it a bit. But on the weekly, it doesn't. And yeah, this is flat and you're breaking down a bit, but I mean on the weekly, this is still a bullish chart. Like if you roll over here, what do? Do you come back and tag the 20 for a first touch and then bounce? Like obviously we're rolling over, but I mean, we haven't even tested the support level on this thing yet. So we've got, it still might have something there. Silver, I want to look at silver really quick because, for obvious reasons. Here we go. Let's go to our daily. Similar candle to gold, I guess. Bit of a doji that came back, wicks close to the T line and pushes higher. And it's trading still above that 5 EMA. So you remember we talked earlier about the horse being a little bit far away from the barn and it comes back and tags it? Well, this candle here was a little far away from the barn, created a little gappiness, and boom, came back and closed that off. There's the 4 hour. This is really interesting, right? This would definitely be a close, with only 14 minutes left, it would definitely be a close below the T line, but at this point above the 20. Still a bullish chart. You don't like the wick, right? Because you might come back and see that one day. Still a bullish chart though. It would have to break down from here in order to give us confirmation. And these are the things that might make us believe before it's time to truly believe. In other words, you could simply bounce here too, right? It can be completely faked out. So this is why we wait to be told. Now, unless your tolerance, right, to give away is, you want to take it, go ahead. But I'm just saying the chart itself is still bullish until we get that confirmation otherwise. So I think with everything that's gone on today, it's been a wild day. Look at the NAS 100. That's the 4-hour. Like this just big massive capitulation. And at one time, this is going to be a solid red candle, right? This is why, waiting for those closing candles is kind of important. Look at this thing. This would have been just a big red dagger, just like this one. And now it's green. Right? And came back and did what? Came back to the POC and wicked through the 200 MA on the 4-hour. Which means on the daily, what did we wick? The 50. Is that not a place where we would look to be a buyer? We talk about having orders at places that might seem unreasonable, but are actually naturally, technically appropriate. That's one of them. This is kind of the reason why I've been sold on the 50 like I have. But this daily chart, do you close above the T line? If you close above the T line, hey, that's still more bullish than bearish. So it's interesting to see the pushback, even though there was a massive sell-off. But don't be sold that it's, the turnaround and price is going to make new highs or something. Not at all. And when we look at Bitcoin, it just continues to slide as well. Now we're 5,300. There's the lower value range. There we go. These are just levels, right? Fibs, fractals, filters. The fibs and the fractals will get you in the right place at the right time, and the filters that we use help you stay on the right side of the trade. And if we can do that, then I think we've helped, right? So I guess we'll get ready to close this down next week, I believe on Thursday. I hope to have Dan Ushman from TrendSpider with us. Dan is the president of TrendSpider, and he is going to free up some time to join us and kind of talk about his journey with technical analysis and, of course, his experience with TrendSpider. And he was actually quite helpful to me. He asked me if I ever thought of turning our script into an oscillator, and I was like, I don't even know how to do that. Or I've tried, but unsuccessfully. And, very quickly he was able to help me do that. And this is one of the things with TrendSpider that I think is really, really, really cool. Is once you're, and I think for younger people, unlike myself, I'm not dating myself, but I'm telling you I'm probably older than you are. For you people, this is a great platform because you're going to be able to eat this stuff up. The technology is going to feel comfortable right away, and what it can provide opportunity-wise is the juice is worth the squeeze. That's for sure. So here's basically our oscillator, and what it does is it helps, what I'm finding, maybe unclutter the chart a little bit. It's going to produce signals at the same time. But I do like the histograms. It kind of reminds me of something called an Arun, but this is actually giving buy and sell signals. But I like the histograms as a representation as well of velocity and momentum, or the fuel cells as David Elliott would call it. So hopefully we'll have Dan next week. I'm thinking it's going to be Thursday, and I think it should be a very interesting hour or so. If you're interested in checking TrendSpider out, just head over to their website. It's trendspider.com. Do a little reading. It's an AI intense platform, and if you wanted to give it a whirl, you can use the code BL25, and that'll grab you 25%. So head over there if you're interested, and we're going to spend some more time again next week with TrendSpider as well. But I want to thank you for your time, and we will see you